Now, I'm sure you guys are well aware of the fact that airline stocks, along with the entire industry, have been getting absolutely destroyed this year because of that global issue. And as a result, there's a lot of risk involved with investing in any of these companies because the industry might not even look the same in the future if things don't return to normal. Now, having said that, one of the videos that I keep getting requested is to talk about airline stocks and to share my opinion on which one of them I think looks the most attractive from a long term perspective, assuming that the industry does eventually recover. Well, in today's video, we're gonna first take a look at the problems that the industry is facing, what exactly is happening, and what the government is doing to bail out these companies and what exactly all of that means. And then we'll break down some of the largest US airline stocks out there by looking at things like their business, their performance, their valuations, and so on, and I'll award points to each as we go through the list, and we'll kind of rank them from best down to worst based on my opinion. Should be a fun video though, and I really hope you guys enjoy it. And if you're already invested in an airline stock or you're just kind of researching them more, I hope you get something out of the video. And if you do, make sure you hit the like button because it really helps the channel and it means a lot to me. But with all that said, we got a lot to cover, so let's just go ahead and dive straight into this. Okay, now before we cover the industry issues, let me just quickly mention the stocks that we'll be focusing on, and to keep things simple and not make the video too long, we'll just use the 6 largest US airlines by domestic market share, all of which have at least 5% market share and have all agreed to bail out money from the government as well, which we'll also discuss further in just a second. But those include American, Delta, Southwest, United, Alaska, and JetBlue, and we'll kind of just keep them in this order throughout the video whenever I make any different charts so that it's less confusing. Now, in case you don't already know, American, Delta, and United are really considered the 3 bigger companies with larger networks and global exposures, while Southwest, Alaska, and JetBlue are generally considered low-cost carriers because they are more competitive on price. They're smaller and generally rely more on the domestic market, but we'll also talk more about that, including the pros and cons of it, a little later in the video. All of them, though, are also included in the only airline ETF that I'm even aware of, at least it's the only one that I track, and that's one that is called JETS. I believe it was created in 2015, and as you can see on this chart here, it typically traded in the $20 and $30 ranges, but it just got absolutely destroyed this year, as you can see on the very end of the chart there, where it really just kind of fell off a cliff. That crash from the 52-week high was over 65%, and even after a recent rebound, it's still down over 55% at today's prices, which again is a very significant crash. That's because all around the world, travel restrictions have plagued airlines in an effort to stop the spread of that global issue. And even where flights are allowed, there's really no demand for them since people are either on lockdown or just too afraid to travel because of the fear of catching that global issue, being stuck in a metal tube up in the sky with a lot of other people. As a result, even the busiest airports in the US, like the ones in LA, New York, and Chicago, have turned into virtual ghost towns. So even if we are able to start reopening the US economy in May, which who knows what that will even look like in terms of what parts we open and by how much, you're likely still going to be dealing with people that are too afraid to travel. And while we may make more progress on treatments and soon be headed into a future where the rates of that global issue actually start to go down from their peaks, as it currently stands, cases have done nothing but go up around the world. And the result of all of that is that these airlines are burning through an enormous amount of cash, as most of their fleets are either grounded until further notice, being populated with only a tiny amount of passengers that in many cases don't even cover the cost of the flight, or alternatively are being stuffed with cargo for shipping and delivery purposes rather than for human travel to help offset with at least some of that huge drop in demand. Some airlines outside the country are even going as far as to put cargo above in the empty seats, while others have even opted for removing the seats altogether to make more room for the cargo. Although I don't think that's approved yet in the US, but it likely will be soon because I was reading that a lot of US companies like American and Delta are currently lobbying for it. Either way though, these companies are definitely not built for this type of environment where travel demand is virtually non-existent, and the result is gigantic cash burns. Now, we don't have the exact figures from every company yet, as that information will likely be included in upcoming earnings reports, but according to Airlines for America, as of April 14th, US passenger volume was down 95% year over year, forcing the airlines to burn through more than $10 billion a month altogether. And some of the big dogs like Delta and United have already told us that they're currently burning through more than 60 and $100 million a day each, respectively. Those are huge amounts of money. As a result, US airlines were asking for a bailout of around $50 billion. Now, so far, the government has essentially agreed to all of that, except that 25 billion, so half of it, $25 billion will be in grants and loans for helping with things like payroll so that they can at least keep some of their employees around. And a lot of that is in forgivable grants that they don't necessarily have to pay back. I think it was like 70% was like cash grants and then 30% was low interest loans. But then besides that, another $25 billion is being offered in additional loans that in some cases, I believe even gives the Treasury the option of buying stock, although the dilution to shareholders is looking like it will be pretty minimal, so most investors are not really worried about that. In any case, here's a screenshot of how the first $25 billion breaks down based on what we know so far. And it looks like all the stocks on today's list will be likely receiving funds. So based off what we know so far, let's just go ahead and assume that these companies will be avoiding bankruptcy for the time being to kind of keep the video simple. But with that said, how do we further break down which stocks are better than the others? Well, in my best efforts to not overcomplicate the video with too much information, I'll just be ranking them based on 4 simple categories. Number 1 being current valuations of the stocks to see how expensive they are. 2, past performance and balance sheets to see how well management was running the company. Number 3, scale and what kind of business each company has and what are the pros and cons kind of associated with that. And then finally, number 4, I'm just going to throw in dividends as well because obviously they are going to get cut, but I am kind of curious to see which one would be more likely to be a bigger dividend player in the future, assuming that things do eventually get fully back to normal. So let's go ahead and run through the list here, and I'll be awarding points for each company as we go through each category. Okay, so starting with valuations, they've all crashed by huge amounts from their highs, but in case you're curious, United is currently down the most at negative 70%. After that, American and Delta are both down over 60% each, and then the lower cost airlines like Alaska and JetBlue are just a bit lower than that at negative 59% each, with Southwest holding up the best out of the group at just slightly less than a 50% drop. More importantly though, when looking at PE ratios based on the past 12 months, which by the way, we can't really look at forward earnings because it's pretty irrelevant at this point with how rough the next 12 months will be and how most analyst estimates will likely be way off given all of the uncertainty. But when looking at trailing ratios, they're all very low right now given everything that's happened, and they're also well below the sector median, although Seeking Alpha doesn't really specify exactly what they include in the sector, but either way, they're all well below it. But if we try to get anything from this, I would say that Southwest is pretty high there at over 7, which I guess does make sense given the lower drop, and I would also say that Alaska and JetBlue are pretty high at close to 5, while American, Delta, and United are all valued the cheapest at about 3 or less. So I'll go ahead and give 1 point to each of those for now, since the crashes have been harder and the resulting valuations are more attractive based on past performance. But with that said, PE ratios are only one piece of the puzzle. So I'd like to also take a closer look at things like sales, profitability, growth, and of course, the balance sheet to get a more complete picture. Well, when looking at sales, I created this chart here to show you revenue per year for each company, and the white bar there is 2016, and then the brightest blue bar goes up to 2019. And then I also added the compound annual growth rate for each in those green boxes. And as you can see here, the 3 big dogs are really Delta with the most revenue of all, followed by American and then United. Meanwhile, Southwest is a lot lower and also has the smallest growth of all, but while Alaska and JetBlue have the least revenue, they also have the most growth, with Alaska having by far the highest growth rate of all at 14%. None of the other companies are even in the double digits. But while I think that JetBlue has impressive growth there at 7%, Delta is only barely behind them at 6%, and yet they look like a behemoth in comparison as they generate tons of billions of dollars more. So for revenue, I think I'll go ahead and give 1 point to Delta for the clear dominance and still respectable growth, but I'll also give 1 point to Alaska for being so much further ahead than the rest when it comes to pure growth. But what about profitability? Well, we already know that airlines spend a lot of money on things like CapEx, debt reductions, share buybacks, and dividends. So to keep things simple, I just want to know how much raw cash these companies generate from their regular operations. Well, when looking at operating cash flow, we can see that Delta is once again the largest and still has respectable growth of around 5% on top of that. On the other hand, American looks like it's in horrible shape with negative 16% growth. Southwest is a bit shaky there with some ups and downs, but overall negative 2%. And JetBlue has the lowest amount of cash flow and still has a negative growth rate of 4% as well. However, United and Alaska look pretty good with the first and second highest growth rates respectively, but Alaska's cash flow is very small in comparison to Delta and United. I'm liking United though as the second largest cash flow and number one highest growth, so I'll go ahead and give a point to both Delta and United for having both solid cash flows and growth. And finally, when looking at their balance sheets, I just kept it simple with the green bars representing current assets for the last quarter, with the red bars representing current liabilities plus long-term debt. And you can see that American really looks like the worst of the bunch with a ton of debt, while Southwest looks like it has the healthiest balance of all, and then Alaska and JetBlue look somewhat reasonable as well, but I went ahead and converted these into ratios just to make sure, and yeah, Southwest clearly has the best ratio, and therefore I will give a point here to Southwest for the better looking balance sheet. And that means so far Delta is leading with 3 points, United is in second with 2 points, and all the rest are tied with 1 point each, except for JetBlue, who is in last place with 0 points so far. Okay, now what about their businesses? Well, to keep things simple, let's just focus on scale, and I'll elaborate a little bit more as we go through this. But there's really two schools of thought here. Now, on one hand, having smaller scale might mean less planes to maintain while being grounded during everything that's going on right now. And it might also mean less international exposure, which could also be beneficial considering that a lot of people might just feel a lot safer traveling domestically with that global issue going around. Whereas traveling to other countries, they might not fully understand how those countries are dealing with that issue and whether it's fully under control. Whereas domestically, they might have a better understanding of that and just kind of feel more comfortable and safer. Also, I highly doubt that a lot of people really have to travel to other countries for things like work and other necessities versus people that have to travel domestically. So I think having more domestic exposure versus international exposure could theoretically be more beneficial during a time like this. On top of that, lower cost airlines like Alaska, JetBlue, and Southwest may also benefit from their generally lower prices during a horrible economic environment where people are paying more attention to the prices of tickets. On top of that, they tend to have less market share as well, which means more market share for them to steal. On the other hand, if you're thinking long term and you really do think that the industry will eventually get fully back to normal, then you might want to have that bigger player, that more dominant market share leader with the bigger fleet, the bigger network, the higher barrier to entry, and the beneficiary of things like economies of scale. Not to mention that the higher cost airliners will likely need to lower their ticket prices anyway. Now, for me personally, I do prefer in this situation the greater market share dominance and the higher barrier to entry, but I do admit that it really could be argued either way. So maybe we should be giving a point here to whichever company has a good balance of both sides of the argument. Well, domestically, American, Delta, Southwest, and United have all substantially more market share than the other two, and unfortunately I couldn't find reliable data on global market share, but I was able to get global network destinations, and despite Southwest coming in at number 3 domestically, they actually shrink all the way down to last place when factoring those in, even behind both Alaska and JetBlue. Still, they actually have a much larger fleet than them, and despite having such a small presence globally, Southwest actually had the third largest amount of passengers last year, even ahead of United and ahead of both Alaska and JetBlue. So from a scale perspective, Southwest does seem to have a good balance of everything that may help them kind of weather the storm a little bit better, thanks to their mixture of low prices, strong domestic market share, and low global exposure. So because of that, I'll go ahead and give them a point here, even though I admit that this category is extremely subjective and can easily be argued either way. Okay, now we can't finish up the video without just quickly mentioning dividends, because a lot of these stocks used to actually be pretty good dividend plays before all of this started. So let's just go ahead and quickly cover what's going on with that, and then we'll wrap up the video with my overall conclusion. Now, one of the stipulations of those grants and loans that the government is giving the airline industry is that these companies cannot buy back stock or pay dividends through at least September of next year. So around a year and a half at the minimum. Assuming that everything one day does eventually go back to normal though, who is likely to pay the highest yields? Well, If they were to continue their payments at today's prices, Delta would be way ahead of the pack at almost a 7% yield. United and JetBlue don't even pay a dividend, but Alaska definitely stands out as well with about a 5% yield. American isn't too bad at over 3%, but Southwest is a bit down there at just over 2%. Delta and Alaska, however, did have the highest payout ratios, although that doesn't really matter now and they were still pretty low regardless. Plus, they were only slightly behind Southwest in growth history with 6 years of consecutive growth versus Southwest at 8. So I'll go ahead and give 1 point to both Delta and Alaska because I think that if things in the airline industry ever return to normal and these companies have any kind of shot at paying dividends again, Delta and Alaska will likely take it more seriously and be the more attractive options for that. Okay, so to add it all up, Delta takes the top spot at 4 points. Southwest, United, and Alaska all tie for second place with 2 points each. American takes, I guess that would be the fifth spot with 1 point. And then finally, JetBlue comes in last place with no points, which I am honestly pretty surprised about. Okay, so there you have it, guys. Delta stock looks like the more attractive long-term option based on the things that we talked about in today's video. Now, full disclosure, I do actually own a very tiny position in Delta myself for obvious reasons that we talked about in the video, but it's just about 1% of my portfolio. I'm actually up slightly on it and I'm not looking to buy any more at this time. I just think there's too much uncertainty in the airline industry right now, so I'd rather be focused more on more reliable, stable companies that aren't so directly impacted by everything that's going on. But with that said, again, Delta remains my favorite option of the ones of the list, and that's because they had strong performance in the past, a strong presence in the market both internationally and domestically, which I think is going to be very important here going forward with this global issue. And they also have very little exposure to all of the issues going on with Boeing, which is a thing that a lot of these other airline companies have been having to deal with very heavily. I think after that, the only other two stocks that look kind of attractive is maybe Southwest and Alaska, but the other stocks on the list I'm not even really interested in tracking. But anyway, those are just my thoughts. I would love to hear what you guys have to say down below. Let me know if you agree with the ranking. Would you keep Delta up there or would you replace them with some other one? And let me know if you're either invested in any airline stocks or if you're thinking about investing in any airline stocks. I would love to hear your opinions down below as well. And I hope you guys enjoyed the video. Thank you for all the support. Thank you for watching. And I hope you all stay safe out there and that you take care. I'll catch you guys in the next one. Bye-bye.